There's a lot of media speculation about the downturn in what economists call the Australian property market, with doomsday predictions for house prices in 2023. But when you look at the actual data, that's far from the reality. There continue to be growth markets right across the country, as well as some which have been in decline since 2021, which was long before interest rates started to rise. For the Price Predictor Index Summer 2022-23 edition, we analysed thousands of housing markets throughout Australia to determine the patterns with sales activity, which means buyer demand. We do this because sales volumes are a forward indicator of what will happen with prices. Rising transaction levels are usually a precursor to property price growth. Equally, if sales activity is falling, price growth will slow or stop and prices may fall. We predicted the recent decline in prices in Sydney well ahead of the interest rate rises because there had been a dramatic fall off in sales activity in that city. Equally, we forecast that Adelaide and Perth would resist the downturn pressures because sales activity in those cities continued to be strong. In our new analysis of the latest sales volumes data, it shows that while some locations are in decline, there are still plenty which are pumping strongly. Across Australia, there are over 800 towns and suburbs where sales activity is rising and hundreds of others with consistent market performance. There are also many markets where sales activity has tapered off and some where there is a distinct pattern of decline. The media has linked that decline in some markets to recent interest rate rises, but our analysis shows that the demand in the majority of those locations started to fall well before the interest rate rises by the Reserve Bank. Our analysis shows that transactions declined in Sydney and Brisbane and in lifestyle markets like Byron Bay and the Sunshine Coast since the middle of 2021. Transaction numbers have been fading quarter by quarter since then, with quite a dramatic decline in sales activity in Sydney and Brisbane in particular in the March quarter of this year. And this drop-off in market activity has more recently started to show up in the median house price data. As is always the case, there is a time lag before a change in market activity translates into a change in price behaviour. And this means that judging the performance of a market by median house price changes alone will not paint an accurate picture of what's happening. Our analysis of market patterns right across the nation confirms there are still many growth markets in Australia, particularly in the smaller capital cities. Perth suburbs, for example, continue to experience strong buyer demand and high transaction levels, with prices still rising, particularly in the more affordable areas. The Adelaide market, which I've long considered to be one of the best prospects in Australia, continues to show consistent strength. Darwin is experiencing busy sales activity, and it continues to offer investors the highest yields in any capital city. Now, while the shine may have come off the Sunshine Coast market in recent quarters, other regional Queensland markets are still pumping strongly, including Toowoomba, Townsville, Gladstone, Mackay and Rockhampton. Within Melbourne, affordable outer ring suburbs are still recording high levels of sales, led by the Hume, Whittlesea and Melton municipalities. We've also identified a high number of markets which are neither booming nor crashing, they're just chugging along with steady sales activity in defiance of all the economic disruption that's currently occurring in the background. Now, the common feature of most of the strongest markets nationwide is affordability, which is the key driving force in real estate at the moment. Overall, it all bodes well for solid markets in 2023, with plenty of locations across the nation set to deliver growth in the year ahead.